Hi and welcome to another video. Today I wanted to discuss being present, and I will use these first couple of trades in this new combine to demonstrate that point. So first off, a little bit about my method. I've spoken about it before, but perhaps we can go into a little more detail here. Essentially all I'm doing, you see these blue dots are just pivots of a certain magnitude, meaning that there are a certain number of bars on either side of these blue dots. So up here the setting is 13. That means this blue dot has occurred because there are at least 13 bars that haven't breached that high to the left, and at least 13 bars that haven't breached that high to the right. And at the point where 13 you reach the end of the 13th bar or candle after this point, that will turn blue. So that's what these blue dots are, and I use these points as anchor points to put on my fibs. Now my fibs just have the golden mean, which is 0.618 or 61.8 or 0.618 in decimals, and then I have the inverse golden mean, which is 1 minus the golden mean, i.e. 0.382 or 38.2. So those are the two fib levels that I have on, and I look for those. That's the golden mean. You can do a Google search for it yourself, but basically it just occurs in nature all the time, and that's why these particular fibs to me are quite significant. It's like it occurs in the Mona Lisa and in shells and in leaves and spiral patterns and so on and so forth. So it's a logical fib to use. So I use these fibs in conjunction with bracketing off significant price action, both projections and retracements. So I could just as easily do retracements within this box, and then these levels will become the levels I'm looking at within that time frame, within that piece of chart. So that's the backdrop, 30-minute chart. And then on the 5-minute, when we get to those areas, when the 30-minute confirms with reversal candlesticks, and then we get to these areas on the 5-minute, I drop down and look at price action. So let's talk about what I did today. I've been here since, it's now 3:20. I've been coming and going since 1 o'clock, and I knew that this was an area I was looking at. So I'm looking at somewhere, looking over to my 30-minute, I'm looking at the area around 603. So anywhere as high as 21, I think, long, and obviously on the 5-minute chart this is a big area to consider. Anywhere from 621 to 585. So this is where I'm looking to go long, anywhere in this, not in this particular area, but anywhere laterally on this area. So then, of course, if you went long up here, you get fried. If you go long here, the same thing. So now you're looking at candles within that area. So we'll take that off, and what do we see? We see it's slowing here. So this is a place where people could have initiated longs if they were looking at something similar to me and got stopped if they're using any kind of intraday stop, like 5 ticks, 10 ticks, 15 ticks. In order to survive that, you'd need like a 40 tick stop, which most intraday traders don't use. So pretty much everyone got stopped if they went long here. And I too was looking at this area. But the candles don't lie, and the way the candles form, if you look at them in conjunction with your clock, which I do, people, market makers, other participants, the market itself plays little games where it will sort of attempt to make form. If you see, for example, a candle, and this is a bit of advanced candlestick analysis, if you see you've got a 5-minute candle, 5 min, and for the first 4 minutes and 30 seconds that candle is a big down red candle like that, or the first 4 minutes and 45 seconds. If in the next that's the majority of the candle, right, of 5 minutes. If in the next 15 seconds this turns into this, then you know that a lot of impatient people who were shorting because they thought, well, this candle's going to finish red, I'll just go short now. Then a lot of people shorted down here, which then becomes here. And of course, this is a very bullish candle, especially if it's at the low, such as this one here. If it's at the low of a downtrend, that's a very bullish candle. So as soon as the high gets triggered, that's going to be a whole bunch of short covering. And then as people cover the short, these people who got short down here lose ever increasing amounts of money. So that's a long-winded explanation of the power of looking at the turn of a period bar, whether that's 5 minutes, 1 minute. When that period is coming to an end, look at the ends and the beginnings of that period, because that's where the games are played. And this is what happened here on this green candle. I almost went long. It did something near the end. It shot up. I needed it to close sort of lower down, and it moved up quickly at the end of the candle. So that told me that that was a trap, and then lo and behold, it dropped off. Of course, that won't happen all the time, but that's what happened this time. Came back up appendix style, and then left this wick behind, which is all relative. I know this would scare most people off from going long, but then I had the confirmation with these wicks here. So now I'm drilling down into where I want to go long. But because of fear of missing out, and this is where the present moment comes in, because fear only exists in the future. This is we're here at the present. This is where we want to be. This is the past, and this is the future. Every worry we ever had, what is worry and anxiety? It's a projection of what some people call false evidence appearing real. That's what the acronym for fear that a lot of psychologists will use. False evidence appearing real. It's a fabricated thought in your mind that you're experiencing in the present about the future. So I like to call this, instead of false evidence appearing real, I like to call it future evidence appearing real. And no one can tell the future, but we like to think we can. So because I thought I was going to miss this trade, I jumped the gun here and I got stopped down here. So now I've got stopped because I was living in the future. Fear of missing out is living in a future where you're not in the trade. But then I corrected course, and the real entry came, and I entered here, and then subsequently took the trade off up here where I was supposed to according to my plan. So 1 hour out, 2.5 hour in. And so I'm at 1.5 hour currently on the day. But that's not the point of this video. The point is, we bound from fear, which is a future-based emotion, to anxiety, which is a past-based emotion. Anxiety, regret, these things exist in the past, things we did that we are thinking about. But everything that we feel, be it fear or the anxiety, all happens in the present. So my advice is, and I've extensively studied meditation and it's helped me a lot, although I have, to be honest, backed off in recent months and the last year or so. So something I need to do more myself. But developing a present moment awareness will save you from doing these kinds of things. Because what could have easily happened is I went to the future and I experienced fear, which caused me to jump the gun, and I got stopped. Now I'm looking at the past because I just got stopped, and I skipped this new present moment, which allowed me to profit. And this has happened to me many, many times, so I'm not saying I'm immune to that. This time I escaped and I still took action in the present, despite the regret that I experienced about jumping the gun in the past. So to end this video, my message is check yourself. And this message obviously is to myself as well. That's why I'm making this video. But to anyone who's watching who maybe, is having trouble in trading, or this extends to life as well, but let's focus on trading. Anyone who's sort of finds themselves floating around, we need to remain rooted in the present and ask ourselves if what we're considering is based on what's happening now or what we think may happen in the future. And is what we're about to do now or not do, because not doing something is an action in and of itself, is what we're about to do or not do, the action we're about to take or not take, based on this present moment, or is it based on something that happened to us in the past? So that's it. Like, stay in the present, do breathing. Perhaps I'll share my personal meditation routine with you all in another video if you're interested. But there's lots of material on the net. I would suggest Meditation Shift if you want to look into it, because that's what I've been using for the past 3 years. And that's it, really. Stay in the present and watch your trading results improve over time. So that's it for this video and all these doodles I'm doing on here. Like it if you got anything out of this video, please, and stay tuned for more videos. Catch you next time.
Fingers